To welcome our next keynote speaker to the stage, it's my pleasure to welcome the Chief Technology Officer for Australia and New Zealand for our keynote sponsor, Kyndryl. This is Jim Freeman. Jim, the stage is all yours. Sure, good to see you.
Thank you. Can you hear me all right? Yes? Yes? Okay. Right here can hear. That's good. So as he mentioned, I am Jim Freeman. I am the Chief Technology Officer for Kyndryl, commercial for Kyndryl. We are very happy to sponsor today. We believe in a conversation around industry professionals and innovation to really understand how technology is driving fundamental transformation. And if this last decade hasn't taught you the importance of that, be it digitization, COVID, and now generative AI, you have been asleep. It has been a whirlwind of disruption. And we have been at the center of that, helping our clients do that. We are a very old new company. We've been in the business for over 30 years managing infrastructure for the world's largest enterprises, be that financial industry, banking, transportation, telcos, you name the industry. And over those 30 years, we've seen many, many disruptions, and we are a very safe pair of hands that help our clients move through those transitions. So yes, this is the Kyndryl lanyard. I don't know where Natalie is. It's not the new ABA logo. It is, in fact, Kyndryl. Right now, we're seeing tremendous pressure in 4 dimensions: geopolitical and economic instability, cyber risks, digitization in general, and an ever-present scarcity of skills in the market. We have been supporting the Australian market for many years, and in fact, we recently were instrumental in a major business transaction. One of the major banks divested itself of a major book of business, and Kyndryl was instrumental in untangling those 2 technologies, all with maintaining very strict internal walls as the ACCC did their due diligence. So we were very pleased to be chosen and very proud of the work that we did in that case. And in that vein, we all know that the ACCC works to make markets fair, transparent, and competitive, be that through securing data sharing, support of consumer data rights, or managing critical infrastructure, among other things. And before I introduce the chair of the ACCC, Gina Cass-Gottlieb, I'd like to share a couple of highlights about an outstanding leader. Over 3 decades in around legal regulatory, the first woman to lead the ACCC, and their span of control includes obviously digital markets, infrastructure, consumer protection, among other areas. Today she'll share some of her perspectives on what is the focus of the ACCC's regulatory framework, their evolving role in supporting fair, transparent, and competitive markets, particularly in the financial services market. So please join in welcoming Gina to the stage. Gina?
Good afternoon, everyone. It's a pleasure to be here with you. I want to start by acknowledging the traditional custodians of this land, the Gadigal people of the Eora Nation. I pay my respects to them, on whose country we're meeting today, and I honour their culture, their history, their truth, and their elders past and present. I also extend my respect to the Aboriginal and Torres Strait Islander people and colleagues who are with us today. Thank you very much to the ABA for the opportunity to join this conference. I enjoyed listening to that previous panel. These are critical times for all of us, both in navigating disruption, in finding opportunity, and for each of us whose work is so critical to our financial system to be able to do so in a way so that we have a system that is resilient, supporting our economy, productive and trustworthy. I also want to start with my thanks in thanking Anna. I had the opportunity to be at Anna's welcome event a number of years ago before I had joined the ACCC, and worked closely with Anna for both while I was not at the ACCC and now since at the ACCC. Anna has brought significant leadership, absolute dedication, and a management through significant periods of economic and community crisis where this sector, I consider, stood up and supported the community in significant and creative ways, some of which were assisted by the ACCC through authorisations, but critically were led with really creative thinking. I acknowledge that. I thank you, Anna, and I give you my very best wishes for the future. What I just heard and what you have spent yesterday and this morning is looking at incredible challenges. Disruption is the norm, opportunity is manifest and before us, and the ACCC has an important role. Jim introduced me well in that regard, an important role both in understanding, setting in effect guidance relating to maintaining competition in markets. So this opportunity has a diversity of competition, a diversity of innovation, greater capacity, and you will hear subsequently, I'm going to also talk in the digital platform space to the importance of ensuring Australian businesses are able to participate in that innovation in the same manner in which global businesses are currently doing so. We need to do so fundamentally in addition to support the trust. There was a lot of discussion in that panel about being customer-centric and recognising the differences of different cohorts of customers, but the trust that is coming from the community and from consumers. I want to briefly take you to the 2025 Edelman Trust Barometer, a survey of more than 33,000 people across 28 countries, which actually indicates a trend of declining trust in a time of change, in part because of the community concern to understand the community's place and how the community will benefit in a time of such significant change. That barometer found an increased fear amongst Australian respondents that globalisation, economic pressures and technology threaten their job security. In addition, 62% of Australians reported a moderate or high sense of grievance, defined by the belief that the system favours the privileged and that government, including regulators and business, serve a select few and act in ways that don't benefit the majority of the community. In these circumstances, there is a challenge for us all, and I take this also as a challenge for the ACCC as a regulator, with consumer protection and the protection of small business as a key part of our mandate. In this circumstance, it's very important that regulators, government more broadly, business leaders, and also there is a gap in trust there for the media, actually. So belief in the respondents, at least to that survey, that the media are not fully informing people. And when trust collapses, so does the confidence to engage and the capacity to then be early adopters, to be capable of taking advantage of change and opportunity. Trust, in effect, underpins the social contract that ensures markets function and economies flourish. So it matters to all of us in this room, regulators, business leaders, service providers and consumers, and stewards of the systems and institutions that influence people's lives. So we find ourselves in this time of persistent disruption and declining trust. Those are important challenges. It's an opportunity to innovate. I consider for each of us, and also for the ACCC, to engage transparently, with integrity, to do what we say we are going to do, and in that way to support the trust that underpins our system now and our system into the future. I noted Bettina's question before, this question about trust for our Aboriginal and Torres Strait Islanders customers and community members. It is very important to remember, and the ACCC in part is engaged in this in the Regional Telecommunications Inquiry, that there is a digital inclusion gap there, and that as services move increasingly to be digital, as the report that this panel was just speaking about, which has very many important consequences, that these questions of fundamental just telecommunications connectivity, digital inclusion and digital literacy also become important points. The ACCC is aware of this, and they are important points for the sector as well. I want to take this opportunity to look at our role. Jim described it, promoting competition, protecting consumers, and thereby supporting the growth and the future of the financial system. I will look in that in quite the breadth of our roles. So looking at scam protection framework, digital ID, consumer data right, digital platforms, cash distribution, and also, interestingly, the efforts of this sector to participate in sustainability collaborations. The starting point is that disruption is undoubtedly the norm. This is creating new intersections between competition, consumer protection, data collection, and privacy. In this environment, regulators are increasingly required to make decisions quickly under conditions of uncertainty, to balance innovation with safeguards, to ensure that regulation is proportional, that it's streamlined, as Joe has been saying for quite some time, simplified, that in fact between regulators, where we have quite a degree of regulatory overlap for this sector and for multiple sectors, that there is close coordination between us, that we deduplicate as best as we can, and the ABA has had a number of initiatives in this regard. What we also need to do is to act transparently, proportionately, and anchored always to the public interest. I am seeing this and terming it as right-size regulation. You will see in this speech that I'm addressing areas where, in the protection of consumers, in ensuring that we have the best opportunity for really vigorous and innovation-producing competition, there are areas where we do need regulation. It has to be proportionate to harm and proportionate to the benefit that can be delivered. I'm calling it right-size regulation. So I'm still speaking in favour of the importance of the right regulation applied proportionately and removing regulation that is not producing benefits to the economy and to consumers. Relevant to this, our traditional role has expanded in recent years, including new regulatory and, even in common with the people in this room, digital service delivery functions. One area in which our evolving role is evident is in the work to combat scams, already referred to as a rising concern in our digital economy. Everyone here will be aware that 2 years ago, the government established the National Anti-Scam Centre under the stewardship of the ACCC to drive a coordinated response to scams. Since then, we've seen some encouraging initial successes, and in 2024, reports of scams and scam losses declined by 18% and 26% respectively compared to 2020, to the year before. The banking industry has definitely played a very important part in achieving these outcomes, and the ABA has been closely involved. However, scams still affect far too many people and pose too great a risk to our community. They also continue to significantly undermine trust in our financial services, technology, and institutions. That's why the next phase of the work to combat scams through the new scam protection framework is so important. What the framework will do is set consistent and enforceable obligations for businesses in the key sectors, which creates the vectors in which scammers are able to operate. This includes banks, telecommunications providers, and certain digital platforms, and will likely then be the first sectors required to comply. Another key feature of the framework is the mandatory scam intelligence sharing, which should produce a capacity for one capture of information and data and then sharing amongst the parties who are capable to then take really significant disruption and prevention action. We are keenly aware of the need for right fit regulation here that will balance the outcomes it will deliver for consumers and for banks and other businesses in terms of reducing losses in this way with the burden it poses for businesses. To this end, we are working closely with government, industry and the community and consumer representatives to ensure the framework achieves its purposes and is practical and proportionate. Industry input to Treasury's consultation process will also be vital to getting this right, and I encourage your continued collaboration. The ACCC has, in recent years, evolved in terms of our roles in these sectors, including in digital identity and the CDR, and our involvement in these programs reflect the broader transformational changes we're all dealing with. Many of you will be already familiar with the development of digital ID systems in Australia as a means of improving efficiency, underpinning online trust, reducing the holding of data in multiple business environments, thereby reducing the risk of data breaches and the risk of fraud and facilitating digital commerce. The development and use of these systems is increasing. It can be seen in MyGovID, which now has more than 10 million Australian users accessing more than 230 government services. New legislation passed last year supports the phased expansion of this Australian government digital identity system to include state and territory governments. We already have members from certain state and territory governments, and in time the private sector, noting that the private sector solutions and ecosystems such as Connect ID are already in the mix. The new legislation recognises the importance of privacy and security in digital ID solutions and the role, very important role, of interoperability, ensuring the solutions can be used across different platforms and services. As these systems develop, one of the factors that ACCC is very conscious of, it's important that regulation supports consumer trust and consumer choice. Users should be able to choose their digital identity provider, whether government or private, and be able to trust they will receive the same consistent protection right across the system. A related area the ACCC has a longer role in building the foundations for in trusted digital infrastructure is the consumer data right. As many know, the CDR gives consumers the right to safely access data about them held by data holders and direct the information to be transferred to an authorised third party. While consumer uptake of CDR has been more gradual than expected, the foundations of the system are well established. The underlying digital infrastructure is handling increasingly heavy API traffic while maintaining fast response times, and some 530,000 consumers are now using the system. The system is technically and operationally capable of delivering real benefits, but we do acknowledge that complexity and challenges have presented obstacles to achieving these benefits. We are aware of the burden that has been faced by this sector in terms of many aspects of the complexity of that system, and we see real importance in simplifying it and making it more proportionate. Together with Treasury and other relevant agencies, we are focused on delivering new priorities, including making compliance more proportionate and efficient, supporting high-value use cases, including in consumer finance and lending. Rollout of the CDR to the non-bank lending sector, which is occurring, will promote competition and innovation. Other changes we know are important to simplify compliance, including streamlining consent arrangements, removing data sharing requirements for niche products, reducing the period for which CDR data must be held and shared, and providing an exemption for data relating to trial products and during a trial period. We have accreditation functions in both digital ID and CDR to ensure that participants meet high levels of privacy, security, and authentication standards, as well as ensuring compliance with what are often complex and highly technical rules and data standards, which will be looked to be simplified. As we navigate disruption in the financial and services sector, our focus is on responding to emerging challenges and supporting competition. Our inquiries and investigations into digital platform services provide an example of this balance between regulation and innovation. As financial services continue their digital transformation, and the ABA 2025 Bank on It report undoubtedly has given key data supporting this, firms' ability to innovate and compete increasingly depends on access to key digital infrastructure, including cloud platforms, mobile operating systems, app stores, and frequently discussed AI tools. Our final and 10th report in our digital platform services inquiry found, won't surprise people here, that Apple and Google have significant market power in mobile operating systems and app distribution, which creates risks of potentially anti-competitive tying between in-app payment systems, app stores and distribution, and the mobile operating system, and denying interoperability to key device hardware and software that payment providers need to innovate and effectively compete. Two key data points that were in the report that I note that are relevant to this is the report that $160 billion of payments were made through mobile wallets last year, 3 times the level in 2019. And that now the significant that more than 99.3% of banking customers are banking via digital channels. Since 2017, the ACCC has deeply considered competition and consumer concerns posed by digital platforms. We have recommended, and the government and Treasury have been exploring, a range of proportionate regulatory responses based upon a targeted, service-specific digital competition regime only focused on the most critical digital intermediaries. I do want to point to a few regulatory innovations, I would describe it as, that are occurring in other jurisdictions, including the Digital Markets Competition and Consumers Act in the UK, a very similar model to that recommended by the ACCC for Australia, and the Digital Markets Act in the European Union. Under the Digital Markets Act, in accordance with compliance with that, Apple offered in July 2024 for the first time globally NFC access via host card emulation. There are additionally other competition law actions being taken very relevant to financial services and payment services, including the recent US federal court ruling in the Epic against Apple case, which has enabled app developers to direct customers to alternative payment systems. Previously, there was a steering prohibition that prevented that, so that apps could not recommend payment from the customer's own bank or another card or other payment system that the customer wished to use. And now, post this competition law, US federal court ruling, that Apple has been ordered to comply with a prior court order to that effect without incurring Apple's commission fees. Spotify, Patreon, and other service providers now have the ability to offer lower prices and better customer experiences. These are meaningful benefits from a payment services competition perspective, including for businesses that are payment service providers, greater capacity to innovate, greater capacity to offer more choice and different services at lower fees, and the ability, when they're being charged lower fees because there's competition in these, for instance, in app stores or in app payment methods, to have more funds to invest in development and innovation. Greater competition in payment services manifestly will have flow-on effects to the broader economy, including increasing productivity. In addition to competition reform, we've also recommended changes to protect consumers from unfair digital practices, such as subscription traps, account lockouts, and to improve redress when things go wrong. In short, competition in financial services increasingly depends on competition in the digital infrastructure behind it. Our regulatory frameworks must evolve accordingly. One area, and it was interesting hearing the description from the rural and regional both banks and parties investing together with the banks in the rural and regional communities is a question of the continuing role of cash in a resilient payment system. While it's undeniable that digital payments are increasing rapidly, cash remains essential for certain cohorts of our community in particular, and indeed more so in rural and regional areas, and also enhances the resilience of the system, serving as a reliable fallback during power outages, natural disasters, or digital failures. Recognising this, the government is committed to maintaining access to cash and to mandating acceptance of cash for essential goods with appropriate exemptions for small businesses. The ACCC's role here has been in respect of considering and giving authorisation to the ABA to coordinate cash in transit sustainability measures, and together with the CFR regulators last week jointly releasing a consultation paper on the potential future regulatory framework for cash distribution. We look forward to receiving the response from this sector. While much of my focus today has been on the digital transition and the associated challenges and opportunities, I note the transition to net zero is also reshaping the work of financial institutions and regulators. In 2023, 1 in 4 authorisation applications for exemption from the Competition and Consumer Act to enable collaborations to go ahead between businesses considered environmental benefits. In 2024, that figure rose to 1 in 3. For example, this month, the ACCC issued a determination granting authorisation to the Australian Sustainable Finance Institute and industry participants to collaborate on sustainable finance initiatives for 5 years. Competition law need not be a barrier for those considering sustainability collaborations that deliver an evidenced and clear net public benefit. A wide range of sustainability collaborations are unlikely to breach competition law, and where there's a risk of breach, our exemption process enables a flexible ability to receive legal protection for businesses who wish to work together to achieve better environmental outcomes. I am pleased to have this opportunity to draw out the wide range, Jim called it a span of control, of engagement that the ACCC has with this sector. A time in which regulators are increasingly called on to respond in novel ways to complex and interrelated challenges. As I mentioned at the start, trust in regulators, in government and in institutions is not a given, but it can be earned through transparency, through integrity, and through collaboration and a shared commitment to outcomes that benefit all Australians. I'm very pleased to be here to have spoken about this, and I'm also happy to take questions.
Thank you, Gina. Take a seat. That's one of the ones you've got. Thanks, Gina. As you take a seat, we've got those microphones moving around the audience. If you'd like to ask a question of the chair of the ACCC, please throw your hands in the air, grab the attention of our microphone wranglers, and we'll get those microphones to you. Let me start, if that's all right. At the same time as you're acknowledging the challenges of persistent disruption and the erosion in some places of trust, you're talking about the opportunities to innovate and engage with integrity. How do you balance that challenge versus opportunity? And what are you doing with other stakeholders, in particular other regulators, to all work together to sort of harness the potential here, while at the same time insulating yourself against these challenges?
So if I take, for example, in relation to digital services and digital platform, we are in a digital platforms regulator with the OAIC Privacy Commissioner, the media regulator and the e-safety regulator. We are gathering together our knowledge. We are thinking about the way in which AI operates with huge opportunity, but guidelines to protect, for instance, young people, to ensure that there are competitive conditions there. So we are seeking to share knowledge, be one point of contact for industry, and to ensure that the work we're doing is consistent and coherent. In relation to CDR, we work closely with the OAIC So where they are looking at privacy and aspects like that, we ensure that if there are investigations in relation to conduct of concern, that we work on them together and that we don't duplicate in terms of the way in which we're doing so that we are carefully taking account of these points. The ACCC is also we are seeking to directly contribute, particularly through our regulation of digital ID, to enable a key aspect of trust that will enable, in effect, with much less impact on businesses, less requirement to hold identification data for most, so they can just rely upon digital ID, but also to ensure that there is a situation which is contrary to some areas of new electronic services. So we have one e-conveyancing provider. The objective that the ACCC is looking to in relation to digital ID is to ensure that there are multiple providers. You can make a choice, their system's willing to operate, and there can be an assurance amongst the community that all are meeting the required standards. So that, we think, enables innovation, enables competition, but still allows an underpinning of trust proportionately, because there are set standards which people have a confidence are being kept in place.
Fantastic. Throw your hands in there if there's a question you'd like to ask of the Chair. Another balancing act is between innovation, a good thing, an important thing in a dynamic economy, and the relevant safeguards around innovation, all done with transparency, of course. There's a focus, it seems, in the government at the moment on cutting red tape.
Yep.
What's critical when we get your, as I like to call it, RSR, right-sized regulation, proportionate, that still allows industry participants with different business models and the like to participate in a sustainable way in an innovative, dynamic economy? How do we get that right?
So first, we are like many regulators, reviewing the manner, firstly the areas we're regulating, the manner in which we're regulating, and also the processes we are undertaking in order to test these questions of right-size regulation, but in addition that they are proportionately implemented, taking account. So one key part of the question of looking at risk and looking at harm is recognising that smaller business can pose both very new and innovative approaches, but also can have less harm because of a smaller footprint. So we're looking at questions of proportionality in that way, and we have been closely engaging with other regulators with those points in mind.
We've got a question down the front here. Going to get a microphone to you there, Miller. Just take a couple of seconds. What would you like to ask there?
Finally, thanks very much, and thanks, Gina, for coming along to talk to us today. I was just wondering, from your point of view, the ACCC's point of view, how you view or look at the competition for banking and banking services in Australia. And you occasionally get something to opine on when someone's trying to do an acquisition or something like that, but it is quite a, you've got four major banks and a whole host of smaller banks. How do you look at the competition in our industry in the country?
It's a very good question, and it's one that has a lot of focus. So firstly, the ACCC has recognised the continuing, and you referred to it earlier in the panel, actually, there was a reference to it earlier in the panel, the continuing significant market shares that are held in the key sectors, both in terms of particularly mortgages and also in deposits, held by the four largest banks. Depending on what we're looking at, it's somewhere between 75% to 82%, depending. We are also concerned about areas in which, while there has definitely been entry, Macquarie is clearly a key participant. There are key areas where rural and regional banks are very important in service and what they're offering. Those banks, however, have not gained as much of that market share as Macquarie has taken when Macquarie has taken it from the four largest banks. We have seen in certain areas that there is more competition in terms of below the line. So initial offers, bonus rates, short-term offers for new customers, which doesn't necessarily translate to the same competition across the whole. We can see the increased service and competition that mortgage brokers are playing in terms of mortgages. But the bottom line is, while we recognise some change, we think there continues to be, as a result of economies of scale, technological cost, much of what was discussed on the last panel, that there are challenges for the growth of, and significant growth in a material sense, of smaller and medium-sized competitors. So in that context, when we see some relatively similar steps and coordinated sort of steps between the four majors, we are watching carefully to be satisfied that competition continues to make its way to the parties who need it, both residential consumers, small business consumers, and other consumers. So we can see, in effect, green shoots and opportunities, but we also see major challenges for strong competition from new and smaller participants.
Mindful of the time, let me ask you just one quick thing and letting you go. Regulation, let's be honest, it's not everyone's favourite word. You talk about the evolution of the ACCC. Has there been an evolution in the relationship in the way you're seen? Is it still us versus them? Is it still, here comes Gina and the fun police again to tell us what we can't do? Do we make enough use of the relationship in the way that collaboration and force enhancement can happen, or have we got a way to go?
So I think we've made a good start. And I think what particularly the SCAM initiative has shown is that there are areas where, if there is not full collaboration and trust, frankly, between industry participants and the regulators, so that is including the ACCC as the steward, ASIC, and the ACMA, but particularly the banks have been leaders, and at least some of the telcos as well. And that is specifically set up in a co-leadership and collaborative way, because without that approach, we will have limited chance to make the difference that we need to make to really fight highly sophisticated global criminals. And so that has set up quite a different model of together achieving benefits and public interest outcomes that are both in a regulatory perspective valuable and also in a business perspective valuable. There are still going to be circumstances where the ACCC, if there were anti-competitive conduct or conduct that is harmful to vulnerable consumer cohorts, we must investigate and act. And in fact, one of the key strengths of being able to have regulation that the community trusts, and I mean by this not only consumers, I mean businesses broadly, is that we act on evidence, but when there is poor conduct, that we act strongly. But we are much more conscious of the importance of this spectrum. In all cases, we seek to provide a capacity to engage with us and for business to understand what our priorities are, what work we're doing, where we see real harm, and where we're on this end of the spectrum rather than that end of the spectrum. So I think there's a change there. And I think there's a recognition we can, as a regulator, achieve better outcomes where we recognise this spectrum and where we can best serve the economy, the productivity, efficiency, and protection of consumers.
It's always great to hear what you're thinking. Thanks for sharing your time with us today.
It's a pleasure. Thank
Gina
you very much.
Cass-Gottlieb, the Chair of the ACCC. Thanks so much, Gina.
Thank you.
That gets us to lunchtime now. You know the drill. Head outside. Lunch is served. We'll be starting back here in about 40 odd minutes. Until then, enjoy your lunch. See you at about 1:20.